Okay, so in this session, we are going to basically be talking about various career options in finance. What are the skills needed in those segments? What are the core opportunities that are available, predominantly from the Indian markets perspective? And how many such opportunities are available? How do you prepare for those skills? How do you plan a career in that segment? And try and answer some of the common queries as to what your approach should be if you're going towards one of those segments. Some of these segments are a little bit difficult to get into, so the skill set required is predominantly non-negotiable in some of these segments, right? So we will try and talk about it as we go along. The segments we are going to try and cover today in this session would be essentially on investment banking, equity research, markets within the investment banking domain, credit research, private equity, venture capital, and wealth management. That would be the broader backdrop of careers that we're going to talk about. Also trying and touching upon some fringes around this in terms of corporate finance and so on and so forth as we look at those roles and what skills are needed in this segment, right? That's the broader contour. And towards the end, we'll tell you in terms of how we can help you in some of these plans and skill enhancement as you go along for building a career in this segment. Let's begin with the first one, which is the most coveted role in finance, investment banking, right? So the predominant idea about an investment bank is to understand what it does, what are the various roles that are available. We'll try and talk about that as we go along. Understand that the term investment banking is slightly different in connotation in India as compared to how it is viewed globally. Globally, investment bank or full service investment bank is a superset under which you will have banking operations as well. In India, predominant terminology of investment banking, when you say investment banking, it means transactional advisory, essentially buying and selling of stakes, and M&A is what investment banking entails in India, right? So I'll explain that as we go along. There's a subtle difference between, what these terms mean globally and in India. Just that in global context, a bank like a Goldman or an HSBC would be considered as a full service investment bank. In the context of India, a Kotak Mahindra Bank or an ICICI Bank would be called a full service bank. Within that, they would have an investment banking arm that is a specialized advisory, transaction advisory function, right? That is going on. So that's the context of investment banking as a role. There are two broad segments in which you can divide it. You can talk about it in the context of markets, and you can think of it in the context of transactions, right? Markets and transactions. What do you mean by transactions? Buying and selling stake in an entity, a client entity, or M&A. That's basically a set of transaction. Markets, on the other hand, is when you are deploying capital in terms of various asset classes, making investments, making trades on your books or on the behalf of the client. Markets is typically a role that is big outside India, used to be big outside India, then has shrunk a little bit over the years. Specifically post 2008, it shrunk a lot because till 2008, banks used to have their own trading books, which shrunk significantly post 2008 subprime crisis. In India, markets does not really come up as a very big role under investment banking domain. So investment banking in the context of India is predominantly the transaction side of things, which is essentially helping a corporate raising and deploying capital. You're either raising capital in the form of issuance of equity or issuance of debt, right? Venture capital, private equity, whatever way you are basically helping a corporate raise money, an IPO for that matter, is one part of it. Whatever way you are helping a corporate deploy that capital, deployment predominantly in the purview of purchasing some other company. So M&A is essentially what will fall under the pretext of investment banking in India, right? Predominantly. Of course, there are other advisory services. So investment bank will also go and help. If a company is sitting with, let's say, $100 million of cash, the investment bank or one of its arms could help the company sort of deploy it for short-term periods around that. Correct? That's the contour. Now, think about what is it that entails this. The role predominantly, as I said, in very simple words, is helping a corporate raise or deploy capital. Correct? A full service investment bank would do a bunch of things. An investment bank in India may not necessarily be doing all the activities that are listed here. A global full service investment bank like an HSBC or a Goldman would do everything end to end. right? A bank in India would be dealing with markets and all, but an investment bank in the connotation or the term that means in India could specifically be looking at transactions, right? So you could divide it into those two segments. Transactions would be M&A, it would be IPO advisory, helping somebody come up with an IPO, or fundraising, simple fundraising that is there. Markets would include trading, creating structured products for end customers, right? Let's say there's a client who has multiple currencies and exposure to multiple currencies and wants to create a structure around those currencies, hedging some while keeping the others open. That's a structured product that an investment bank could be designing. And sales on all these segments in terms of going and doing a sales to the client with respect to a certain set of products. Corporate clients, of course, that is essentially what is going to be under the markets purview, right? You could also look at some of the names that are there. So the bulge bracket ones would be essentially Goldman, Morgan Stanley, JP Morgan, HSBC, etc. Mid-sized IBs would be all Indian IBs, basically, with all due regards to everything. It's just the size of operations on a global scale. So Kotak or ICICI Securities or Edelweiss or Lincoln or Jeffrey, some of the global ones also that have presence in India at a mid-sized level. And then there are a boutique set of banks which started predominantly as transaction advisory outfits, only dealing with transaction fundraising, fund deploying, and so on and so forth. And they have since become much bigger, right? So I've written boutique only because of their advent. Now some of them are really large. For example, Avendus is now a very large entity, has a broking arm, has a wealth management practice, has an investment banking practice, and so on and so forth, right? So Avendus is it started with the investment banking domain, is one of the bigger names at this point of time in any tech deal that happens in India. So they also have a very specific tech focus that comes here. Then you have names like O3 Capital, Spark, Indigo Edge, Allegro Capital. Again, boutique sized firms that are basically looking at these transaction services that are there. These are entities which are essentially helping another entity or corporate raise or deploy money, right? So how would you think about raising money? Raising money, the idea would be, let's say, uh, somebody wants to go and raise $50 million today as a startup. They would go to an investment banker. The investment banker would help them out, kind of raise this capital. Somebody who has invested in one of these entities may want an exit out of this. So an IPO could be a transaction. Recently, we had a couple of IPOs, a bunch of IPOs that were happening where private equity investors were the entities that were offloading their stake. That's a part where, again, investment bankers would help creating an IPO advisory role in that overall context, right? So that's that. You could also segregate these roles in terms of front office, middle office, and back office, right? So when you're looking at pure play transaction services, right, front office is basically the team that is dealing with the end client, negotiating, talking about, what should be the valuation, doing the valuation, and all of that work. Middle office is where typically your research sits and your risk management sits. These are segments where research and risk management would be sort of centralized for the entire firm, and that's what is called as middle office. And back office would probably be ops and a bit of compliance and all of that is there. Almost all of the large investment banks have their middle offices and back office operations, some of the back office operations in India at this point of time. Some of these are also good starting points if you do want to build a career investment bank. Then probably starting at a middle office and then trying to make a move towards front office could be a desired strategy in case, let's say, you're not able to crack a front office role right away because the opportunities are limited there, right? I'll talk about that as we go along, but that's the contour of how do you segregate front office, middle office, and back office as well. Loosely used terms, there could be overlap in terms of functionality from firm to firm, but broadly you could segregate it in this context, right? You could also segregate markets in terms of equity and debt capital markets. So firms raising debt or borrowing money in the form of bond issuance is a debt capital market activity, whereas a firm basically going and doing an IPO or raising money in the form of an equity is an equity capital market or ECM activity. There are entities or investment banks who specialize on equity capital markets. There are entities who specialize on debt capital markets, right? Some of them are very strong on debt side, some of them are very strong on equity side. So again, from that segregation perspective, you could see a bunch of roles that kind of come out. You will need to have an understanding of instruments on each side when you're looking at a role in this kind of a segment, right? A similar role is something related to corporate finance. Right now, an investment bank would be helping another entity go and raise and deploy capital. But what if you are yourself a very large entity, right? You're looking at, let's say, Reliance Industries or a Tata Group or Aditya Birla Group or one of these large conglomerates in India. They usually, while they would take the service of external bankers, they would also have an arm internally to look at a bunch of activities like how do you allocate capital across various businesses, right? Take a pharma company like Dr. Reddy's, for example. Dr. Reddy's labs would have operations in like 60, 65 countries. How do you allocate capital to these projects or these countries every year? Who does that decision? Who does that capital budgeting decision? So think of corporate finance as a very similar role to investment banking, but inside a company. You're again helping the company raise and deploy and manage the capital. So capital raising, project finance, treasury, all of it would basically fall under corporate finance roles. Very, very similar to investment banking. Skill sets needed are largely same. Just that in the investment banking domain, you have to kind of get business. Somebody's raising money, you want to be the investment bank advising them. In corporate finance, this comes automatically because the company is anyway doing its operations and somebody has to work internally. So to that extent, investment banking is a lot more front-ended. When I say front-ended operation, you will need to have client communication skills into the picture. Whereas corporate finance, on that other hand, in its pure parlance, is more an internal role, right? It is happening inside the company essentially. Correct. Some companies don't have a very well-defined corporate finance division. It's just the CFO's office or the finance division of the company that takes care of these activities. So that's the construct on corporate finance. Now think about what skills would be needed. Imagine you're trying to advise a global private equity investor about an investment in, let's say, some kind of a machine learning or AI tech startup in India, or a consumer lending startup in India, or a consumer facing D2C brand in India. So you need to understand that industry very well. Or you could switch the roles and say you are advising a D2C brand in India, help them raise capital, for example, right? You'll have to go to this firm and tell this firm that, look, I understand this business more than you. I understand the industry in and out. So you need to be very, very good with industry analysis. You also need to be very good with company analysis. You need to be strong in terms of your understanding of how does the company work, what are the financial statements of the company. Although at this point, the information available is not very large. So you have to build a story looking at the data that is available and have that eye for detail when you're evaluating a company, saying, okay, this adds up, this doesn't add up. So strong industry understanding, strong financial statement analysis skills. And of course, eventually you're either selling a stake or buying a stake. So strong valuation skills are needed. Correct. So in that order, industry, company, and valuation skills. Valuation is not very, very detailed at this level. When I say not very detailed, that's incorrect. I shouldn't generalize. It is, you wouldn't be able to really justify a detailed discounted cash flow valuation because a lot of the companies are at an early stage when you're dealing here. So you have to understand what valuation technique is going to work in which segment of this industry, and how are you going to justify a certain valuation when you look at that. Right? That is the contour on the context of valuations as you look at that. If you're in the markets domain, then you need an understanding of global markets, knowledge of various instruments, currencies, derivatives, equity, fixed income, commodities, all of that is required. How do they work? What happens? What's the macroeconomic relation between them, and so on and so forth. You need to have a strong understanding on business development and negotiation skills, because more often than not, the real meteor roles in terms of investment banking would be on the context of front end roles, right? And when you are on the front end role, you have to get business. It's not like suddenly a company is going to come finding an investment bank all the time, saying, I need to raise $100 million. Can you help me with that? Sometimes that might happen, but most of the times you have to go and find companies that are raising capital, and there would be 20 other investment banks kind of vying for that one mandate. Right? That's the construct of how an investment banking domain works, and that's the set of skill set that is required. I'll come back towards what kind of opportunities exist at some point of time in our discussion today itself. Let's move very quickly towards equity research. Again, another very well sought after role in finance, and one of the core segmental roles in terms of understanding of how financial markets works. Equity research, as we understand, is researching about stock markets and companies that are listed, right? You see all these reports that come out, you keep reading about these statements that, so and so brokerage upgraded or downgraded a particular stock, right? The stock of Paytm fell today because there were some brokerage downgrades on that based on certain research and report that came out. Good example of understanding what equity research works about, right? There are two segments again to equity research. There's something called as buy side and there's something called as sell side, right? Now, the terms buy side and sell side are slight bit of a misnomer. It's not like you're buying or selling a security. The buy side is essentially the fund manager who's basically investing capital on somebody's behalf, right? The sell side is essentially the broker or the brokerage who's trying to give out research and get the buy side trade on their broking terminal, on their broking account. So if a fund manager from XYZ mutual fund wants to buy 10,000 crore worth of Infosys, which brokerage would they choose is probably going to be dependent on how good the research a particular broker is providing. That is sell side. So all the research reports that you read, which say buy, sell, hold, outperform, underperform, all of these research reports are coming from sell side broking houses. That's the sell side of equity research, right? All fund managers, whether they are in a mutual fund, whether they are in a portfolio management service, PMS, or an AIF, alternative investment fund, an FII, a hedge fund, insurance, all of these are buy side. They're actually transacting on the stock, whereas sell side is largely giving out research to be used as an input at the buy side. So the client for the sell side is buy side. Sell side is essentially giving out the research to buy side. Buy side is using that research, building on top of that, and then going ahead and deploying capital into certain stocks by trading on the brokerage on the sell side, right? Now, the same firm could have two separate divisions, buy side and sell side. For example, every large bank in India would have a AMC, mutual fund arm, which will be on the buy side, and a equity research or institutional equities, which is on the sell side, right? Again, sell side gets broken down into two parts. There is institutional equity research and there is retail equity research. As the name suggests, institutional is going to deal with institutions as clients. Retail is going to deal with retail individuals as clients, right? You and me trading on a particular company's broking account will be dealt with the retail research team. So we will get stock tips, but they will come, or stock ideas, they'll come from the retail research team. Institutional team would basically be giving out research. Those detailed 30-40 page reports, they go out to the buy side essentially, right? Now, that's the construct. Again, some of the names that you would have heard are typically all your mutual funds, about 50 mutual fund houses in India. Everything is buy side. PMS, AIF, all of that is buy side. Sell side is all your global and Indian broking houses that are coming out with reports. What's the skill set that is needed? Now, one, macro perspective. You need to understand what's happening globally in terms of the macroeconomic environment so that you have a view on the markets in the first place. Do you think Indian equity markets are overvalued, undervalued? Why? That's an important understanding, and with reasoning, right? Because everybody can have an opinion, but you need to have a decoding of the reasoning around it. You will need to analyze the industry and the company. Once again, similar to investment banking, just that here you have listed entities, there is truckloads of data available, right? And time is of the essence. So if yesterday Paytm did a investor call, then before the market opens today, as a sell side analyst, it is your job to basically go through whatever they've come out and come up with your recommendation. You saw morning itself, a lot of downgrades had come because of a particular announcement that Paytm had done yesterday, just as a live example. And all these analysts who understand the industry realize this is going to have an impact on revenues and profitability of the company. Hence, they downgraded, or whatever their target prices were, they pulled it down. The stock also reacted negatively today. For a buy side client to benefit out of this research, it has to be timely and it has to be relevant and it has to be crisp. You need to understand the industry. You need to understand what the company is saying, their financials, and what kind of impact every decision they make will have on their financials and earnings and valuation, right? And of course, needless to say, you are in the valuation domain. So you will have to have an understanding of valuation, all methodologies, how they work, why they don't work. We keep getting these questions like, oh, Nykaa's PE is 2000, Mamaearth's PE is like 500. Why is it trading at such a high PE? That's because PE is not to be used in these businesses. So the understanding of which metric to be used in which business has to be there when you are an equity research analyst. How do you evaluate a business? How do you look at a business? How do you understand competitive advantages of a business? Your entire valuation exercise is a function of your understanding of the business, the company, and then projections around it. Understanding equity markets, how do markets function, is a very, very important task. And of course, tools such as Excel. I think Excel and PowerPoint, while you might see that written somewhere, Excel and PowerPoint is like needed everywhere. These days, what is also happening is for data crunching and analysis, a lot of new tools like Python, etc., have also started getting used in the industry. So that's useful. But honestly, on the pure play research domain, you may not need so much of it even now. But if you're doing any kind of analytics on large amounts of data, specifically if you're running quantitative models like some of the mutual funds have started doing now, there you might need a little bit of understanding around that. If you're running a lot of screeners on large amounts of data, a little bit of understanding of coding might be useful. Also, we live in a world where a lot of data is now available, and if you can develop that ability to use technology to wade through that data, make interesting analysis out of it, sometimes that could act as a differentiator. So while so far it hasn't like come in very strongly, I would suspect that at some point of time in the near future, understanding how technology works and basic usage of technology. This is not to become a master coder, but just the usage of technology is something that would be important in all roles in finance, and not just finance, I think everywhere, right? So that's the construct of equity valuation and what are the skills needed. A similar role is credit research. Equity is looking at listed equity side of things. Credit is looking at the debt or bond side of things, right? Every company that issues a bond, if you're raising money, you're going to a bank or issuing a bond. If you're going to the bank, then the bank will basically do some kind of credit research and say, okay, does this company deserve a 1,000 crore loan? And if they deserve a 1,000 crore loan, what is the rate at which I would charge them, right? If on the other hand, you're issuing bonds, then somebody has to rate those bonds. You would see those rating agencies coming and doing, AA, AAA and all of that. So those ratings on the bond define what is the risk that is embedded in that particular bond. That's what these rating firms do. The role is similar to equity research, not very different. But here, remember, there is a slightly different caveat that comes in. When you're looking at equity, right, you understand that there is a bigger risk at play. Everybody who's investing in an equity understands that they can lose money and they can make more money. But when you go towards credit research, when you're investing in bonds, the predominant idea why a lot of people invest in bonds is risk management, lower risk. Because the predominant idea is lower risk, safety of capital becomes paramount. And so analysis of risk in the credit context becomes very, very strong. So this is a role that will be very big on risk analysis. Risk analysis in the context of a bond issuer is predominantly going to be able to read in a lot more detail their financial statements. You can get away with a little bit of superficial understanding on equity research, but there is no hiding in credit research if you miss something that is in the financial statements. So a much deeper understanding of financial statements and analysis is required in credit research. If you go and look at, for example, some of these credit rating agencies like a CRISIL or an India Ratings or ICRA or CARE, their documents about what kind of ratios they use are available publicly. You can go on their website and look at, how do they look at the ratios that are used. So they tweak the ratios, they alter the ratios, they adjust the ratios to ensure that, you're looking at the correct metric in that context. A lot of the times ratios don't give you a correct picture. So you have to tweak them and understand if you're doing credit research or credit analysis in a correct sense. So a much deeper understanding of credit and financial statements is needed. Of course, macro perspective is similar. Understanding of industry and company is similar, but you would need a deeper understanding of financial statements as compared to equity research. That is not to say you don't have to be an expert on financial statement analysis and equity research. It is just that the skill that is going to get tested more here would be an ability to look at historical financial statements and say, okay, does the rating make sense? Whereas in equity research, the ability that gets tested more is your ability to figure out whether a business will create value in the long run, right? Here, the focus is on backward looking data and then looking at, okay, is the risk being mitigated properly? In equity valuation, you're looking at the same set of data, but your idea is basically to look forward and say, okay, can this create value for me in the future, right? That's the subtle difference. Understanding of valuation of debt securities, bonds, fixed rate, floating rate, all of that terminology is required. Debt markets and instruments understanding. Fixed income as a category, you have to understand very well if you're going towards credit research. And then again, tools such as Excel are required, right? Similar roles, just that these are more in number. There's also a market that is evolving in India. So I'll give you that understanding as well towards the later part of the session. Private equity venture capital. Again, now this is the other side of the investment bank. Remember, an investment bank was advising a company to help them raise $100 million, right? Who's putting that $100 million is these guys, PE or VC. Now, again, I'll take some global terminology here. So if you look at the timeline of a company that is investing, pardon my drawing, let's do that again. If you look at the timeline of a company in terms of investing, a company starts with seed investing first, seed fund, right? Then you have angels coming in, angel fund. Then you have VCs coming in. Then you have private equity. And then you typically have an IPO or an exit or a merger or acquisition at this point towards the end, right? Seed is like the initial part. When you just have an idea, you'll get some basic capital amount. That's seed funding, right? In the Indian context, a seed funding amount would be somewhere like up to 5 crore or something, even lesser in some cases, right? Then you have a business idea, something is working, you want more capital to scale it up and create a little bit deeper dent in the markets. That's where people who are trusting you are considered as angels. Even now, there's no viability of the business, but somebody is saying, okay, you have some proof, let me trust you on this. That's the angel investing. Again, no clear demarcation as to what is the amount that an angel invests and what is the amount a seed fund invests, or a seed round gets you. Could be different in different cases. But typically slightly more, 5 to 20 CR would probably be angels coming in. So $1 to $3 million approximately is where most of the angel deals would typically play out, right? VC is where you start getting your Series A, Series B, Series C, all of those terminologies that come in. This would be all your $3 to $5 million going all the way up to, let's say, 10, 15, 20, 30, $40 million. And then you go into the larger domain where PE comes in. Globally, PE acts at a very large scale. Global PE players are like the KKRs of the world who would go and invest in geo platforms, right? And they'll go and invest like $500 million there, right? Or something of that sort. I don't remember the exact number, but yeah, that's the scale at which they operate. In India, the VCPE segment is slightly sort of, overlapping. So you might find a PE fund existing as a PE fund, but doing smaller investment in startups as compared to a VC who might end up doing a slightly larger investment, right? So that's the spectrum where it comes. And again, as I said, size is relative in this case. So for example, a company like Cred in their seed round was able to raise something, if I'm not wrong, if I remember correctly, $30 million. At that INR dollar rate, it was about 200 crore or something of that sort. But that was because the founder was a well-known person and, he had already kind of done a successful exit in the previous startup. So, got the funding. But that doesn't define that every company gets $30 million for seed rounds. A lot of companies don't get that money in VC rounds as well, right? So you have to kind of take it case by case, but that's the broad idea. This is the set of people who are evaluating a startup in terms of the investment potential. They are going to put money in the startup. They are going to run as a fund. Now, the way PEVC as a segment works is there will be a fund where a bunch of investors will pool in money. Let's say investors pool in 1,000 crore. The private equity or venture capital fund or fund manager is basically going to go and invest in these startups now. Use this money, 1,000 crore, and go and invest in a set of startups that are basically under the terminology or purview of what they are going to look at. So, for example, there could be a tech fund or there could be a consumer fund, which is investing in D2C businesses and so on and so forth. For example, in the context of this recent listing, Mamaearth, there were a couple of VC funds that basically exited in the IPO. And you can go and check the names in the IPO prospectus. So you'll get a sense of, which were the funds who invested at an earlier stage and, how did they kind of exit at that stage. So that's what a PE or a VC would do. Now, think about what kind of a skill set would be there. This is a difficult segment to get in because there are very limited roles. Also, typically the industry does not hire too many freshers. Right. Usually a lot of people move from the investment banking and consulting domain to this early stage investing in VC and PE world. And that's how the movements work. But, what are the core skills needed? Instead of listed, now you've gone to unlisted. Again, you'll need an understanding of the industry, but you need to understand emerging trends, right? You need to understand what are the new age companies that are coming up, right? And what are the new trends that are coming up and how do you go and look at that? So while that's a needed and a relevant skill set in equities as well, publicly listed equities as well, I don't need to understand too much about, let's say, battery technology to go and evaluate Maruti at this stage. I might need at a later stage, but not at this stage. But if I'm somebody who's investing in an Ola Electric, for example, or any new age startup that is solving the problem for battery life on electric vehicles, I need to understand what's really happening there. So emerging trends industry, I need to understand very deeply. Valuation concepts become very, very specific to the industry because you really, doing a DCF becomes difficult because the projection is like too long. So a lot of the times your entire idea is a judgment call on what's really playing out. And that's why they prefer a lot more experienced people because they have an understanding of, how cycles work, what businesses will do well. You're basically betting on a bunch of founders to say that, okay, these guys are going to execute and they'll have a right to win. There's a slight divergence in terms of the way valuation gets applied in this segment as compared to publicly listed equities. And I think that's where a little bit of dissonance comes in, where a new age entity lists in the stock markets, a startup lists in the stock markets, and everybody goes like, how can it trade at such crazy valuations, right? And who were these PE VC guys who are giving it these kind of valuations? That's because the PE guy is not your diversified investor. The P guy is, or a P person is somebody, or a fund manager is somebody who's invested in 5, 7, 10 businesses, concentrated bets. And their idea is, make or break. One of these is going to become 100 bagger. The others might go to zero. So they don't care about valuations. They are basically saying, will the company have the right to win in a particular market? Right? And if it has the right to win in a particular market, then what you're paying for it today would be peanuts as compared to what its eventual value would be. You can't value this on PE ratio basis because there is no E in the PE here, right? That becomes a core part. So understanding of the business again becomes very critical. Understanding of financial statements is critical, although you don't have too deep a data set available at this stage. But just the sense of understanding whether a business will have a competitive advantage, not have a competitive advantage, will have pricing power, not have pricing power. That sense is necessary in these businesses as well. So that's private equity, venture capital broadly for us. Wealth management is an upcoming area. There's a whole host of things in wealth management that happen. But you could broadly break down wealth management into three parts. And there's a lot of history around how wealth management has come up. But now wealth management has evolved into a very, very sophisticated role. As a lot of people grow, they have a lot of money to invest over a period of time. They will end up sort of having a requirement for a good advisor in the financial services space. And that's where this role is coming. Earlier, the bankers used to kind of double up on this role. Now this is changing into a specialized role where you are dealing with, a bunch of things under wealth management, right? So what all does it cover? It covers advisory, it covers research, it covers product, right? Product is actually, in terms of a diagram, I think product should be somewhere in between research and advisory. So advisory is what an investment bank does for a corporate, a wealth manager does for an individual or a high net worth individual. Right now, you would have categories that are defined, companies that work with family offices, companies that work with ultra HNIs, U high net worth individuals, HUHNI, ultra HNI, or high net worth individuals, HNIs, or retail investors who are evaluating and putting money in. And again, every company could have a different definition. Family office, for example, would be Azim Premji family office. Argument's sake, for an example, right, where all of the wealth is going to get invested, or Anand Mahindra family office. So these guys require investment advisory services, and a lot of wealth management firms actually specialize in that, right? Ultra HNIs could be somebody who has like 100 crores, to kind of invest something like $10 million or $15 million to invest. HNIs would be somebody in the range of 25 to 50 crore to invest. Retail, actually starts at zero, can go up anywhere, but advisory services become relevant only if you have a 25, 30, 40 lakh portfolio or more than that. This is a huge growth segment, and everybody on the front end of advisory is the advisory domain. Research, somebody has to do research, but this is a multi-product research now. Mutual funds, PMS, AIF, stocks, bonds, everything has to be researched. So there's a broad research team that exists here. May not go in as much depth about products as or stocks as, let's say, an equity research analyst might be using some of that research, but still requires research. And then there's a role called product. There are various roles, product strategist or product or counselors who are there, who basically are a sort of a you could say a channel between the research and the advisory team, and they are trying to sort of explain about each product. Where does it fit? How does it fit? Why is a particular product being recommended, and so on and so forth. So sort of research, explaining it to the internal teams, not doing front end sales. But yeah, there could be a possibility where there's a slightly complicated product, so the advisory team takes somebody from the product team to go and explain about the product, right? So that's what product kind of does. Some wealth management firms would club the research and product team into one, some would keep it separate, and so on and so forth. Huge opportunity space, growing significantly in India at this point, right? Core skills needed in wealth management: you will need a good understanding of macro, you will need a good understanding of products that exist, right? All kinds of financial products that are there. Think about wealth as a segment where you will need a lot of breadth of understanding of financial products. You may not go in too much depth. So probably you're not expected to know how do you go and value a company like Tata Steel, but would you have a view on a commodity fund? That's expected, right? So basically breadth of knowledge, because for me as an investor, if I'm an HNI or a retail investor, I'm looking at an advisor as a one-stop shop. So I could ask you about interest rates in the US. I could ask you about economic movement in China. I could ask you about what's happening to the pharma sector in India. I could ask you about what's the valuation of the market at this point. Should I put in equity? Should I put in debt? You need to have some understanding of all of this, right? So that's the construct of wealth management that is coming along. Now, a few more questions very quickly. So there are some common skills that I'll say. Financial analysis, statement analysis is like a common thread that will be required everywhere in finance. Industry analysis is a common thread. Understanding how an industry functions is a critical skill, a skill that is not really taught to us because it's spread all over multiple subjects. But this is your foremost topic that you will need to know. If you get the industry right in an investment, 90% of the work is done. If you get a great undervalued stock in a bad industry, you'll still not be able to probably, justify the valuation movement there. Of course, valuation is required. So deep understanding of all kinds of methodologies that are there, where to use what, how do you use, and so on and so forth. Understanding of financial markets. Why is a particular market moving the way it is? Right? All the rate hikes and everything, and US markets don't fall. How do you rationalize that? How do you explain that? And understanding of that is necessary or critical, because your investing decisions, your research decisions are going to depend on that, right? Then Excel plus PPT. So I can add that here. And basic corporate finance understanding, right? Which is, when do you take debt? When do you take equity? How are capital budgeting decisions done? NPV, IRR, working capital, all of that is basic corporate finance. Again, hygiene required almost everywhere, right? That is the construct of what all are common skills that you will need everywhere. With Excel, I can also write a little bit of understanding of technology. And when I say understanding of technology, I don't mean coding. Coding is a part of it. A lot of no code applications are available. Python is actually, most of the libraries are already available. You want to try it out. There are lots of tutorials which are available, but you need to be able to learn technology more than anything else. Right, that learning ability is important in technology. How to use tech is what is probably going to be more important in the context of things that we are doing today. These are common skill sets that are there that are needed. Some more questions, right? How many such roles are available? So let me take them one by one. Investment banking, not a very large industry. I think all put together, large, small, there may be about 200 to 300 odd small investment banks in India, maybe a little bit more, maybe a little bit less, but you wouldn't have heard more than 200 different names in the investment banking world, right? I'm probably thinking a stretch there. On average, 10 people in one investment bank. Some will have very large teams, some have 2 or 3 people as well, right? So make that 15, right? So 200 into 15, you're looking at a 3,000 to 4,000, 5,000 people strong industry, right? Broadly. How many new roles will come up every year in this? Attrition is not very large because this is one of the sought after roles. So typically, if you look at the meteor side of investment banking, the core investment banking roles, you would not have more than 200-300 roles a year that are coming up, right? Equity valuation, equity research, for example, 50 odd mutual funds, about 50 odd main reasonable sized brokerage houses, right? Make that 100 probably, right? Just to take it on the outer side. Broking house will probably have 20-man team or 20-person team, right? That's basically 20 into 100, 2000 on the mutual fund side. Again, add 20 for each mutual fund. So that's 50 into 20. That's another 1000. All PMSs, funds, etc., all put together, another 1000, 2000 people probably. So best case top end kind of roles, 5,000 odd roles. If you expand it to a lot of other retail research, etc., probably 10,000 kind of the industry size. Again, function of attrition. Every year you'll have about 500, 600, 700 roles created. You're fighting for that, right? Broadly. Credit is a bigger area because firms like CRISIL, India Ratings, ICRA actually hire a lot of people. These are also good grounds to start working and then move towards equity research should you not directly get into equity research. Credit hiring is probably a bit higher. You'll probably get a few thousand odd roles across various experience profiles in a year across credit agencies and banking as a sector, because banks hire a lot as well in that segment, right? So that adds up to about a couple of thousand roles probably every year. Wealth management is the largest job generator purely because it's sort of B2C. So you'll find a lot of roles. Again, roles vary a lot. There are small size boutique wealth management firms and there are large institutionalized entities. If you're targeting wealth, you probably want to target towards the larger entities or the bigger and the newer age players in the wealth space. But that's a larger space. You'll probably have a few thousand roles there as well that are coming up. Private equity, venture capital, best case 100, 150, 200 odd roles, very specialized roles, don't come every year. They don't hire freshers. If they do hire freshers, there are like 1 or 2 openings that are there in funds. And they'll go to the top end schools to hire those freshers, usually, right? Now, this is not to discourage anybody from applying for any of these roles because these roles are open to everybody, for you, for me, for anyone else who's there, right? This is just to tell you that because everybody is fighting for these roles, the skills are non-negotiable. Whatever skills I have told you, they are non-negotiable, right? So if you are saying I want to build a career in investment banking, then or equity research, you need to be really, really good with industry analysis, company analysis, annual report analysis, financial statement analysis, and valuation modeling, right? And modeling is the smallest part of that because that's on Excel. That's a replicable and learnable skill. It's what you put in that model that becomes more important, right? So how do you project what is going to be next year's sales for Maruti is where your skill gets tested, right? And that's what you need to be really, really good at, right? That's a non-negotiable because everybody is fighting for that role. Everybody is also claiming that they know that, right? And that's where a little bit of the challenge happens. How does one acquire those skills? One, honestly, enough resources are available online at this point of time. You just need the enthu and effort to go and read through it, right? If you need somebody to guide, there are enough people available in terms of courses, right? So for example, people like us would have courses created on that. But technically, it's not a necessary thing. There are enough, as I said, valuation professor Damodaran has put all the classes online, right? Not a lot of people watch them. That's a different issue, but it's available if you really have the enthu to go and do it. The second and more important part is the application of what you've learned. So you're not going to be tested on, do you understand what return on equity is? Nobody expects to, that's an answer that can be Googled, right? You're going to be tested on, HUL's return on equity was 80% in 2020 and it fell to 18% in 2021. So what happened? Right? And why did that happen? And is it good or is it bad? Or is 80 a good number or 18 a good number? How do you look at that? How do you view that? That is where your skill is required. And that's where a lot of practice is needed. So apply your skills, practice as much as you can, build as many models as you can. More important than building the model as a mechanical exercise is understand as many businesses as you can. If I ask you to speak about a business for 10 minutes, can you do that? Is what is going to get tested. That is what you have to do if you're acquiring those skills. So you can do courses, you can do self-learning, you can do projects, you can do internships. I'll write all of that, right? But anything that comes your way that helps you to sharpen that skill set is something that you have to view as a step or a ladder to acquire those skills. So that's where those skills get acquired. That's one part of it. And then the final part is, how do you approach applications in these roles? A very common question I get is, I have the skills, but I'm not getting shortlists, right? Now, the brutal truth is, uh, everybody who applies for an investment banking role will go and say that I have the skills. If I am a recruiting manager, I have zero ways of checking who's saying the truth and who's not. Right. So the reality of the game is that, I'll get 200 applications for every one role. And there is no way of ascertaining who's really good, because everybody's claiming they know valuation. Right. And as a recruiting manager, if I am the recruiting manager, I may not have the time to really go through 200. So how do I shortlist? I don't have a mechanism of shortlisting. So what tends to happen is I'll ignore all freshers, because I just don't have a mechanism to test A versus B versus C, or the time to do that, right? So if you're approaching in these roles, there are two caveats that have to be understood, 2 points that have to be understood. One, when you say you know the stuff, the question you have to ask yourself is, do you really know the stuff and are you really good at it? Are you better than the other 100 who are applying for that role? If the answer is no, don't claim so, because it's not going to help, right? If the answer is no, then figure out what can be done so that you become better than the other 100 who are applying for that role. That is imperative when you're applying or approaching any of these roles. That's one. Second, when you're approaching these roles, understand that the onus of getting the shortlist is on the applicant. If I am applying for the role, the company has no liability to give me a shortlist. There is no onus on them. The entire responsibility is in my hands because I want it. They are not coming to give me a role. They've just opened up a role. I am trying to apply and get into that. So it is my responsibility to prove or give as something as a proof that says that, okay, this person knows the stuff. So if you have done a project, if you have done a report, please put that in your application. It is important, right? And again, remember, 9 out of 10 times, the person sitting at the other end will figure out if you really have an understanding or not. So don't put something which you're not very confident about. So it's in that order. You have to first apply, what skills are non-negotiable, figure that out, acquire those skills to the point where you can ask and answer the first question, which is, am I the absolute best in those skills? Am I really, really good in financial statement analysis? And if I am, then now let me send a proof of my work when I'm applying for these roles. Let me showcase how I can be helpful for that role. Otherwise, it's going to be very, very difficult. I mean, think of putting yourself in the shoes of a recruiter or a company who's just come up with an opening for an equity analyst on the metals sector, and they get like 500 applications for it. How are they going to really shortlist? Everybody of those 500 applicants is saying, I know the stuff, and the onus is not on them, right? So remember, the onus is on one of those 500 has to basically stand out. How do you stand out? By the work you've done. That's where whatever you can do to sort of make your profile stronger has to be looked at. And it's not because I am an education entity or I am coming from an education entity that has made courses. I'm just giving out the reality to you that course or no course, the learning is important and your showcasing of that ability is important. You're not going to be recruited because you did A course or B course or C course. You're going to be recruited if you know the skill. Whatever way and mechanism you can acquire that skill, please do that. Absolutely fine. Doesn't have to be a course. As I said, honestly, in today's day and age, everything is available on the web. There's no skill that you can't learn on your own, right? But if you want to speeden up your progress, if you want a guided approach, then of course there are tools and courses available around that. So that's the construct on how do you go about these. As I said, how many such roles are available? I've given you a broad overview. My numbers could be off by a few hundreds here or there, but understand that the largest amount of roles would be in credit analysis and wealth management. The smallest amount of roles would be in private equity, venture capital, investment banking, equity research are there. Once again, I will reiterate, my idea is not to discourage anybody from trying for these areas, but we need to be absolutely sure of what segments we are fighting for and how many people are fighting for the same set of roles. And consequently, understand that my skill set has to be really, really well developed when I'm approaching these areas. Fair enough? That's broadly it. How can we help? Right? So how can FinShiksha help, or I can help you in terms of what is there? So there's a bunch of free resources that we have created, right? So you'll find we have a YouTube channel. You can search FinShiksha on YouTube, and I'll give you the link as well. You'll find, I'm not very regular there. Hopefully, I will be a bit more regular. I'm trying to be a bit more regular and promise that probably in 2024, we'll have a lot more content coming up there. But even for now, there are a bunch of videos that are there. You might find a lot of them reasonably valuable in the context of your preparation for finance, right? We have, LinkedIn. I write a lot on LinkedIn, so you can find me there, and that could be useful. The blog on our website also has a reasonable set of posts that could be value add for you. There are businesses that are decoded. There are core questions that are kind of talked about with respect to finance, so that might be helpful. And on our website, there are a bunch of free courses that will help you sort of go and quickly kind of get accustomed to some of the areas that are there in terms of this. We have a few short courses, and then we have a few practical courses with projects embedded into that as well, if you're going towards that. That, in a nutshell, is how we can help. You can go on our website, just create a free account there. You'll get 3 free courses, one on financial statements, one on financial concepts, and one which includes all these videos of any of the sessions that we have done that are there. That's basically the construct of what happens if you go on the website and just create a simple free account, and that's something that you'll get, right? Then as I said, get access to these courses. LinkedIn is there, blogs is there, newsletters are there, YouTube is there. Find us there. You will see a bunch of resources that are there. In addition, we have a few short courses. We are coming up with a few more. There are 3 at this point of time which are relevant. In fact, 4 of them which are relevant. Macroeconomics, fixed income, industry analysis, and there's a placement prep masterclass that is there. So there are 4 of these short courses which are available at this point of time, and could be kind of covered in about a 5-6 hour kind of a time frame if you're trying to look at a very quick specific idea. And then we have our core courses which are available, which are around financial statements, finance essentials, equity valuation, investment banking, credit analysis. Each of these takes a little bit longer. They will take about 25 hours odd of effort. Each has an embedded project in it with us. So you kind of apply what you have learned, and the details of these are again available on the website. So you can go and check them out in case you're interested. So these are core courses. They'll take some time to kind of finish. Everything is online, self-paced, video-based that is there. Finally, we have our flagship course, which is called the Analyst Program. That's a comprehensive end-to-end program for somebody who's trying to build a career as an equity analyst or a credit analyst across any of these firms. That's something that runs in cohorts. Again, details of that would be available on the website, and you can go and check that. The next cohort for that will be somewhere in the month of January. One batch every few months is where it starts. That's the construct that is there. That, in a nutshell, is what I kind of wanted to cover at this point of time in the session with respect to all the major careers that are there. Please do try and understand what are the core skills that are needed. Revisit those skills, prepare for them, and ensure that you are able to justify that you are one of the best candidates somebody can look at in that context. That's your approach. That's what you would want to do. That's largely it from me in terms of our discussion in this particular section.